Retail prices in the world's largest economy shot up at their fastest pace in almost 4 decades in November as high international oil prices drove up energy costs. The US Consumer Price Index rose 6.8% last month, according to data released by the Labor Department. Price hikes in fuel, food, homes and vehicles were the biggest contributors. Analysts say if high inflation persists, the US Federal Reserve may be forced to raise interest rates sooner than planned. For more on this story, let's go to TRT World senior business producer Mobin Nasir. Mobin, inflation surged beyond expectations in the US. It actually reached a 39-year high. Interestingly, though, yesterday President Biden stated that information being released tomorrow isn't really going to be indicative of today's reality. It's quite an unusual remark before such a key inflation figure. Why did this happen, in your opinion?
Well, he's right to an extent, to the extent that last month's figures seldom represent the reality of today. And of course, there have been some major developments that have taken place since over the past few days. What the impact on inflation will be, however, is a question mark. Look, we've seen oil prices have gone down in recent days, and certainly that will have a spillover effect, should help bring down at least raw material prices, not just in the US, but across economies. However, we've also seen the emergence of this new variant, the Omicron variant, and whether or not that causes any further closures in the US or in economies that are its major markets or its major suppliers, what that does to prices and demand for US goods, of course, is anybody's guess. To that extent, of course, he's right. The elephant in the room, of course, and one that the Biden administration is ignoring or choosing to ignore, is the amount of money that's been spent over the past few days and the Biden administration is planning to spend in coming months. We're talking about trillions of dollars. If that level of money printing continues, inflation, it won't be surprising to see price levels rise.
Mobin, interesting. How is all of that going to impact the tapering plan in the US? We know next week the Fed will hold a key meeting in which they may adjust the tapering pace. In which direction do you think?
It was a very interesting comment coming out from the Federal Reserve Chairman. You and I were discussing that prior to the show, where he said they might drop the use of the word transient for inflation. What a huge surprise that 2 years into this trend, the Federal Reserve should acknowledge that perhaps this is a longer trend and not just a temporary blip. Look, what they need to look at is who has this lax money supply helped, right? We haven't, unfortunately, seen the level of job creation or the disbursement of wealth or redistribution of wealth that was supposed to be the initial argument for this level of lax or loose money supply. Of course, if the central bank does start tapering, if the US Federal Reserve does start stepping up its tapering, the knee-jerk reaction will be on stock markets. That is, according to many analysts, the reason why they haven't pulled the trigger on it so far. But really the key question is monetary policy really driving the goals that it is intended to drive right now? And many would argue it is not.
Mobin, interesting, and I mean there's transitory for longer, but potentially. Speaking of labour shortage, we're seeing clear signs of tightness in the US labour market. What is driving this? And do you think the equity markets, crypto markets surging, are they playing a role in all this?
I think blaming crypto markets or any other market is a bit of an escapist argument from policymakers at this point. Look, the fact of the matter is, price levels in the US are up nearly 7%. Wage growth is only about 4%. People's real incomes have shrunk under the new president. What we've also seen is that the new jobs that have been produced, that have been added to the economy ever since the lockdowns were lifted, have been mostly very low-paying jobs and service sector jobs. Incidentally, the service sector is the only sector that is lagged behind in terms of consumer prices. If you look at surveys from businesses in the US, 78% of the businesses that did raise prices for their products said they did so not because of labor prices, but because of higher raw material prices. So even though price levels are going up everywhere, the one area where rates are not rising is in people's earnings. And we're talking about, of course, blue-collar workers and middle-income earners, not millionaires or people who have thousands of dollars stashed away to be able to take on risky asset classes like cryptocurrencies.
Mobin, Nasir, many thanks for driving us through this.